As the market is live and trading, Cambium Networks, ticker CMBM, is currently trading at $3.12.97 per share. That is a devastating drop of 62 cents or 16.54% intraday. This is a stock in absolute free fall, and the volume is already explosive, clocking in at nearly 10 million shares traded well before midday. But that price, that percentage drop, doesn't even begin to tell the real story. This isn't a slow bleed, it's a catastrophic collapse from its opening high. The intraday range for today, right now, is $2.82 on the low end and $6.80 on the high end. That's right, this stock has been cut in more than half just today from its peak. This is the definition of a market battlefield, and it's a perfect, brutal example of expectation versus reality. The expectation, the narrative that has been building, is that Cambium Networks was the next to-the-moon stock. Just 2 days ago, on October 29th, this stock posted a mind-bending gain of 377%. You heard me, a 377% spike in a single session. That's the kind of move that lights up every social media feed, every stock forum. It's the kind of thing that has people rushing to their Robinhood app or their SoFi Invest account thinking they've found the next multi-bagger, the next big thing before the rest of the world. The catalyst for this unbelievable surge was a press release. Cambium announced an integration of its networking solutions with Starlink's satellite internet service. And that's the magic word, isn't it? Starlink. You attach that name to a penny stock and it's like pouring rocket fuel on a fire. The market expected this to be the start of a new, glorious chapter for a beaten-down company. But then, reality set in. And today, reality is hitting like a ton of bricks. The 16.5% drop you're seeing now is just the latest update in a massive, day-long unwinding. Anyone who bought at the peak today at $6.80, chasing that 377% gain, is now looking at a loss of over 50% on their investment. This isn't an orderly pullback. This is a panic. This is the reality that the 377% spike wasn't a fundamental reassessment of the company's value. It was a speculative frenzy. It was a classic, and I mean classic, penny stock blow-off cop. The Starlink news was the rumor, and today is the sell the news event. The smart paper, the institutions, and the early speculators are dumping their shares into the hands of the retail crowd that just showed up, and the volume confirms it. This is not the kind of stock you put into a long-term Fidelity Wealth Management plan or a Schwab Intelligent Portfolios robo-advisor account. This is a trading vehicle, and a very dangerous one at that. So let's talk about what's actually happening underneath this volatility. This isn't a growth story like Nvidia stock or a stable giant like Apple stock. This is a company in deep, deep trouble. While everyone was mesmerized by the Starlink headline, they completely ignored the real news which came out just a couple of weeks ago on October 16th. Cambium Networks received a staff determination letter from Nasdaq, a delisting letter. The exchange is threatening to kick them off because as of October 10th, they were not in compliance with the $1 minimum bid price rule. Even worse, the company admitted it's still not in compliance with the rule for timely filing of its financial reports, like its 10K. They're appealing, they're going to a hearing, but let's be clear. A company that cannot file its financials on time and is trading under $1 is not a healthy enterprise. The Starlink news in this context looks less like a new business line and more like a desperate Hail Mary press release to get some positive attention, and boy did it work for 48 hours. What does Cambium actually do? When you strip away the hype, they are a provider of wireless networking infrastructure. They make fixed wireless broadband equipment and enterprise-grade Wi-Fi hardware. Think point-to-point backhaul, point-to-multipoint distribution, and Wi-Fi access points for businesses, schools, and industrial clients. They compete in a brutal space against giants like Cisco, Hewlett-Packard Enterprise, and Ubiquiti. The Starlink integration itself isn't a bad idea. In theory, Cambium's last-mile equipment could be paired with Starlink's satellite internet service to provide robust internet to remote or enterprise locations. But an integration is a long way from a massive purchase order. It doesn't fix the balance sheet. It doesn't fix the delinquent SEC filings, and it certainly doesn't fix the core problem that their business has been struggling. A quick look at their last reported financials shows a company with negative net income and razor-thin, often negative profit margins. Today's trading action is a perfect reflection of this tension. The early morning spike to $6.80 was the last gasp of the Starlink narrative. That was the expectation. The subsequent crash all the way down to $3.12 is the reality of the delisting notice and the fundamental weakness. This kind of volatility is a nightmare for a genuine investor looking for investment help, but a dream for high-frequency traders and those using sophisticated platforms like interactive brokers who can short this stock on the way down. Your average self-investing person using a simple Fidelity mobile app or looking at Robinhood fractional shares is just going to get run over. This is a clear case where the market's enthusiasm, driven by a single buzzword, completely outpaced the company's distressed financial situation. The analyst community isn't buying it either. Even before this collapse, the consensus price target was around $3, suggesting that even the professionals saw this stock as worth less than where it's trading right now after its 16% crash. Looking forward, what's the play here? The future for Cambium is incredibly uncertain. The bull case, if you can even call it that, rests entirely on speculation. First, they have to win their appeal and not get delisted from the Nasdaq. If they fail, the stock gets moved to the pink sheets, and most institutional investment is gone overnight. Second, this Starlink integration has to turn into actual material revenue, not just a partnership, but purchase orders that can fix their negative income. Third, they have to get their financial reporting in order and file their 10K to regain any shred of credibility. That is a mountain of ifs. This isn't like betting on Tesla stock based on new delivery numbers. This is betting on a company's sheer survival. The bear case is much simpler. The company is fundamentally broken. The 377% spike was a pump fueled by a press release, and today's crash is the dump. The company will fail to generate significant revenue from the Starlink deal. It will lose its Nasdaq listing, and the stock will return to trading for pennies where it was before this whole circus started. This is the far more likely scenario. Anyone looking at investing sites and seeing CMBM on the top gainers list from 2 days ago needs to see today's top losers chart to understand the other side of that trade. This is why online investing in penny stocks is so dangerous. It's not a business like Fidelity Investments or a platform like Interactive Brokers that's the problem. It's the underlying asset. A stock like this has no place in a serious portfolio, whether it's a Fidelity IRA or a SoFi robo-advisor account. Here's what I want you to do. Comment below if you think the Starlink news is a genuine lifeline for Cambium or just a short-term hype blast that is already over. Let me know your take. To wrap this up, the story of Cambium Networks today is a harsh lesson in market psychology. The expectation, built on the magic Starlink name, was that this company was turning a corner, that its 377% gain was just the beginning. The reality, as shown by today's 50% haircut from the daily high, is that this is a deeply troubled company. It's facing a Nasdaq delisting, it can't file its financials on time, and it's in a brutal market. The Starlink news was a match, but the company is built on wet timber. The fire we saw was a flash of gunpowder, not a sustainable burn. The market has woken up to that reality today, and the price action is a bloodbath. This is not online investment. It's a gamble. And today, the house is winning.